Hi, Bill Bodner, Mortgage Market Guide. Thanks for tuning into our MMG weekly recap. So it was Fed week and a lot of volatility, a lot of turbulence in January. And this week was another wild week. So there were three takeaways or three lines within the Fed press conference that I think were important for us in both the mortgage and the housing world. And the first one is in terms of tapering, it's premature to even talk about it, meaning that they're currently purchasing $80 billion worth of treasuries and $40 billion worth of mortgage-backed securities. So that 120, we're continuing probably as far as we can see, right? So that's happening at least for the rest of this year in our eyes. Second, frankly, quote unquote, we'd welcome higher inflation. That's when that story changes, right? So right now, inflation's not a problem, and they said that in yesterday's meeting. But they want higher inflation. They're going to continue to throw money and continue to keep rates at zero, and they're going to continue to buy all these bonds until they see higher inflation. When they see higher inflation, that's when this whole story changes. That's when rate hikes start to be discussed, as well as the tapering. So he wanted to put the taper tantrum noise out, and I think he did a good job yesterday. So meaning, but they want inflation. And so you know what that means about for your clients buying real assets, owning real estate, because they want inflation, don't fight it. And then finally, and this is a big one, he said there's nothing more important than to the economy than American people getting vaccinated. And, you know, when you look at the stimulus, and there's two stimulus packages, right? There's the Fed keeping rates low. Then of course, there's these stimulus packages that the administration has, one that's going out now. Then there's another one that's going to come right behind it, 1 point something trillion in March before unemployment benefits expire. What good is the stimulus if the economies aren't open? So we need to get these vaccinations out so that businesses can open, so that customers can come back. And then when you start to look at what the second half of the year looks like, when you couple all the stimulus and the vaccinations and the ability to open up, large pockets of the economy, it does set up for what will be a really incredible second half of the year. And there's reason to be very, very optimistic, and forget about all the talk about, dark days and horrible winters, long winters ahead. Not seeing it, certainly not in our space. And so those are the nuggets we're thinking about heading in the next week. And of course, next week is a jobs week, and we're not expecting great numbers from the jobs. With jobs, the rate of acceleration or the rate of improvement has certainly slowed in the labor market, which points to the need for more stimulus. So we have that going in the next week. Hope this finds you well. Have a great day. Be safe, be positive, and test negative. Bye for now.